It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, the mayor of Beckerville, USA, Mr. Michael Becker.
Hey, Paul, how's it going?
Why do we call you the mayor? I guess I understand that.
Well, you're the one who made it up. So, but it's I think it's because we were joking once because we actually ended up assembling 4 deals in really close proximity to each other, and the Carrollton submarket of Dallas, which is one of them was adjacent to the junior high school I went to because I grew up in Carrollton, and we started joking around calling it Becker Hills because I owned 1,100 units in close proximity, and I think you took that, morphed it into the mayor of Beckerville, and started calling me that on the podcast.
There are so many properties that Mr. Michael Becker and his group at SPI own that you've got to be on the records of paying lots of property taxes. Do they pick you up in that state of Texas limousine?
They do not. So, but they should. They definitely should with all the property taxes we pay, and that's painful every year when we write those checks. But I guess we're helping out all the school children across the metropolitan area of Dallas, Fort Worth, and Austin.
That's good. That's very noble of you guys to do.
So what's coming up here pretty soon, actually, at this point?
Don't forget, get on the calendar, put it on your calendar, January the 15th.
That's right.
January 15th. Speaker series, the Old Capital Speaker Series, featuring this month, Greg Willett. Greg Willett is, you've probably read his name in the paper. Every time you open up the newspaper and it talks about apartment stuff, Greg Willett is always the guy who's quoted. Greg Willett is always the national correspondent for RealPage. He is probably the most quoted person in apartments. He's the guy you're going to listen to on January 15th. And he's the guy everybody listens to, whether you're a builder, developer, an investor, a banker. He kind of tells you where occupancy is and where rents are going to go. So if you are an investor, listen to Greg Willett on January 15th. Go to the Old Capital Podcast and RSVP to come see us. Then also to put the calendar on April the 21st.
That's right.
The doctor is in the house. Mark Dotzer is coming again. He was the chief economist for Texas A&M. He's kind of an independent economist, but he's a guy that will probably have 500 or 600 people come to see him at the Grapevine Convention Center, just north of the Dallas-Fort Worth Airport. So if you are from other parts of the world, come on down, listen to Mark Dotzer. He is always probably the most respected economist talking about commercial real estate. And again, you really do want to come see him. Any words of wisdom on that, Michael?
Yeah, no, I think they're both great speakers. Both have solid information to kind of share with everybody. But I think, as I always say, this is not a business you could do from your home or behind your computer. At some point, you got to get out, get network, get to know people. These are both good opportunities where, several hundred of your closest friends, your other apartment investors, brokers, management companies, insurance people, kind of the people that are doing deals in the marketplace come out, and this is a good way to get networked. And whether you're a passive wanting to find maybe a lead or sponsor to invest with, or vice versa, or if you want to get to know and meet some of these brokers, the top listing agents in Dallas-Fort Worth area, a lot of them tend to come out to these events that Paul puts on. So, and as I mentioned, the first time I saw Dr. Dotzow speak, it cost me $150 to have a breakfast here and speak, and Paul is subsidizing that for you guys, so it's very generous, and I would anticipate that you wouldn't want to miss coming out and hearing what the
he's not cheap, but I will pay.
But Paul is, and so this is painful for him to pay for it.
Yeah, thank you. That's not too far from the truth. So don't forget the Whitepaper report. Go to the Old Capital Podcast. Download the 15 multiple page Whitepaper report on kind of 101 of multifamily investing. Think of us as your best friend. We're going to bring in 70 to 80% of the money when you go out and buy an apartment complex. So know what the rules are. Again, we should be your best friend. So we put together a white paper report that kind of tells you about how to become our best friend. And you want to read through that and understand that. Also, too, we're trying to get 1,000 5-star reviews on iTunes. So if you have a chance, you think we bring any value to the podcast about what we talk about, go on to iTunes, leave us a 5-star report. Again, Michael Becker, yes, the mayor of Beckerville, USA, SPI Advisory, they've done over $1 billion with a B. They've closed over 38 apartment transactions. That's a lot of business.
It's a lot of business.
It is. 8,000 apartment units. If you think of 8,000 apartment units, you think of 16,000 people in those units. Man, that's, you are definitely the mayor. I have to have to help people. Think of all the families that live in those apartment buildings and absolutely love it. So over $200 million in equity that's raised. And so you're about to come up to the tax year. How many K1s are you guys going to build?
Before February 28th, the goal is to get all somewhere between 11 to 1,200 out, and we should hit our goal. So it's a lot of paper to be pushed.
Michael, here is the question for this week. Michael, prices of apartments are pretty high. When do you think it's going to end and come back down?
I don't know. That's a good question, right? That's what everyone's fearful of, or looking forward to, or a little bit of both. I guess I'm kind of both, right? I think every market's a little different. So the answer really kind of depends on the local market, and even within that local market, all the various submarkets of these major cities across the country. So, I'm still pretty bullish overall long term. I mean, you can hear all the studies that the NMHC, National Multi-Housing Council, and the Apartment Association, the NAA, National Apartment Association, did a joint study, and they're talking about how many millions of units of apartments that need to be delivered over the coming decades, just due to all the population growth and demographics, the lack of supply that was delivered for, about 3 years nationally, kind of as we're in the recession. So even with all the apartments they're delivering now, there's still many, many reports that tell you that we're actually undersupplied. Obviously, certain pockets in different cities have different levels of supply. So everything's kind of real regional and local. So, depending on it. But, what I'm familiar with is Texas. What I'm familiar with most is Dallas-Fort Worth and Austin, just because of the markets that we operate in. I think, one of the things at the end of the day, you got to do all the things right. You got to buy something at what we feel is a relative value to current market. So I'm trying not to overpay for something. I just want to buy something I think is a fair price. We're typically looking, Paul, for stuff that we have some level of opportunity to increase the revenue on through our efforts, by improving management or, doing some physical upgrades to the property and providing a better product, buying in, well-located deals and areas that tend to have some growth to them, that are low crime, near schools, stuff like that. And then we got to go manage them well and do cost-effective smart renovations. So you got to do all the blocking and tackling right. So, but with that said, the way I view it is, kind of taking the 5,000-foot view and taking a step back, kind of looking macro here. There's just been so much tremendous growth in Texas and specifically in Dallas-Fort Worth and Austin, the markets I focus on. And Houston and San Antonio also have had it as well, or really the entire state, so even the smaller markets as well. But if you think about it, you and I've lived here my entire life, and Paul's been in Texas since the early 90s, so he got here as soon as he could. But, we were both here in 2010. Living in the Dallas-Fort Worth area. In 2010, there was about 6.5 million people in the metropolitan area. Fast forward to the end of 2018, which is the most recent stat that I saw, there was about 7.5 million people in Dallas-Fort Worth. So, we grew about 1 million people in about an 8-year period. And the projections are that somewhere between 2030 and 2035, there's going to be nearly 10 million people in Dallas-Fort Worth. So if you think about that, that's like about 2.5 million more people than were here to the end of 2018. So that's like the equivalent of the entire metropolitan area of either like Orlando or Charlotte put on top of Dallas-Fort Worth. So, I don't know a whole lot, Paul. I'm not that smart, but if that's anywhere close to reality, what they project, rents have to go higher, right? They just have to go up because there's so much demand coming in, and the supply they're building should be absorbed, and the cost of that stuff is ever escalating between land costs, labor, materials. It's getting more and more and more expensive to build these things, and they're having to build higher and higher end stuff to get the rents that justify the ever increasing costs. So, really, if you're kind of in the middle part of the curve and the affordable apartment space, kind of workforce housing, which is basically what Paul owns, and we effectively at SPI kind of buy the upper end of the workforce housing by buying predominantly A- type apartments. That I think is they're not building that much of the affordable space. So really, the demand is there, and it should be there, and it should be sustainable and growing going forward. So I think it's going to macroly support the prices for many, many years to come. If you're in a market like Dallas-Fort Worth, or on a percentage basis, everything I told you about Dallas-Fort Worth is even higher on a percentage basis for the Austin MSA. So if you find yourselves in a market like that, or Phoenix or Orlando or The Carolinas, I think all those markets, Atlanta are areas that have similar growth stories. If you're in San Jose where the price is crazy, or in New York, and both those areas have, now rent control coming in. So the capital, I'm telling you, the capital's fleeing. We're getting more 212 telephone calls coming in out of New York. I went to a networking event and I met a whole bunch of people from New York that are trying to break into Dallas-Fort Worth. So they're coming. The guys from the New York City are coming to Texas in greater droves than they historically have. So I think everyone is seeing it. So I think, long term, I think it's going to support it. So in the meantime, just make sure you don't dramatically overpay for something. Make sure you set your deal up structurally right, where you're not over leveraged, you're not buying in high crime areas. Make sure you have the capital set aside up front to, cure the deferred maintenance on the property, to implement your value add strategy. Make sure you have good management in place. I think if you do all that, and in the long run, everything is going to be, higher in the long run. So just don't make a critical mistake in the interim if we do have some, or when we have some economic slowdown. So you just make sure you're well positioned. You can weather pretty much any storm. And then in the long run, I think you're going to be very, very happy that you invest in these apartments.
What's Michael Becker's rule number 1?
Yeah, don't buy in the hood. So that hasn't mattered for the last 5 or 6 years, seemingly. But at some point, that's going to matter. And those areas are going to be the most susceptible. The liquidity dries up because people want to buy in nicer areas, always. But people get allured by the seemingly lower price properties, especially kind of late cycle. And then when the crap hits the fan a little bit, when you do get in a recession, those areas tend to have one, more operational challenges, and two, no one wants to buy that crap because they can buy something at a lower price in a better area. So you're stuck owning that deal. So if you do buy there, you better make sure you have a lot of money and capital and your deal set up properly.
Some great information. Yes. Don't buy in diverse, challenging areas.
Yeah. Don't buy in the hood, right? Buy in, low crime areas where, people want to live and always have like intrinsic demand and desirability.
And then also take a look at what the income level is of the tenant in the area. I mean, some of the places that you wouldn't buy in, you go into some of these reports and take a look at what the average income per family is. And if you're trying to think about, well, I can just raise rents because I'm special, that I can bring them up by $150, $200 if I put $3,000-$4,000 worth of repairs on the property. Some of these people just don't have the money to do it in some of these lower economic areas. And so just be very knowledgeable and cognizant.
Mindful of all that.
Yeah, absolutely. So if people want to understand a little bit more about what SPI does, again, tell me what SPI does.
So we're SPI Advisory, Strategic Property Investments, what it stands for. And if you guys want to find out more information about us, simply go to our company's website, which is www.spiadvisory.com. That's SPI like spy, advisory.com. There's a contact us form. Fill that out. And I'm always happy to have a 10 to 15 minute call with listeners I meet off the podcast. If you guys are potentially interested in learning more about what we do and potentially investing with us, that's it. What we really focus on, Paul, and what the focus of 2020 is really just trying to find some high quality opportunities, some apartment complexes that we can put together and, go out and raise capital to take down and operate and, hopefully return a little bit of money each month along the way and a whole lot of money at the end when we ultimately sell them.
I mean, that's absolutely correct, is being able to push back to investors a yield rate of return on the money. And so, that's what people invest in apartments for, because sometimes they invest in high technology stocks. There's no dividends to come there. There's just these huge price points that they think they'll buy it at 10 and sell it at 100. That's not what typically apartments are. It used to be back about 5-6 years ago, but today you're just looking for a nice yield on these properties.
Yeah, and let the demographics of the areas we're buying come in, and the wins in our sales for sure. And we're just trying to make sure that we, focus, stay disciplined, and find some high quality opportunities. We do some current return, like Paul said, and over time the values of these things go up as we, ever increase the rent of these places.
Absolutely, it's kind of a mathematical calculation that you guys do because you kind of understand where the rents are going to and the expenses.
And the debt we get is just unbelievable nowadays, and it's been. The debt terms are just so much more advantageous than a few years ago.
Those negative interest rates that everybody
I'm
talks about.
hoping. We had a couple deals that are adjustable rate mortgages with no floors, and as the floors are coming in more and more now. But if 30-day LIBOR goes negative, we're going to be extremely happy on several of these loans we put on here lately.
You always say this is an extremely unfair practice or business.
Is.
Yeah. So guys that are good operators like you, you guys can get these fantastic opportunities.
Yeah, the loans that the people that have proven themselves in the marketplace and have a positive track record with Fannie and Freddie, you definitely get better debt terms than someone that's new into the business. So completely unfair business. So it's good to be on the right side of that more than the wrong side of it. So we're on the wrong side of it sometimes, but it certainly is good when you're on the right side of it.
Certainly is. Okay, great information from Michael Becker. We appreciate it. Again, I'm Paul Peebles. Have a great day.